What is whole life insurance? The explanation of 5 greatest features when studying various forms of life insurance. You will almost certainly come across a service package known as whole life insurance. Many individuals may believe that this is a really beneficial insurance plan, but they do not completely comprehend it. So, what is whole life insurance? The next post of Smartlifess will give basic facts about this sort of insurance for your consideration before making a decision and know your about health benefits. 1. What is whole life insurance? Whole life insurance, often known as permanent life insurance, is a type of life insurance. The insured will undoubtedly be paid insurance while engaging in life insurance. Because the foundation for the business to pay under this insurance is the death of the covered individual at any moment. The life insurance policy connection is long-term since the policy has no time limit. Life insurance policyholders in certain countries are permitted by law to utilize them to ensure the fulfillment of their legal responsibilities. Because of the long-term nature of whole life insurance, the insurer can invest the premiums and split the earnings with the insured. Whole life insurance is classified into 2 varieties depending on the division of interest: whole life insurance with interest and whole life insurance without interest. When a policy specifies a fixed lifetime premium and a defined amount of coverage, it is generally assumed that the policyholder would not receive a portion of the interest. 2. Outstanding characteristics 2.1. Concerning the insurance coverage, the money insured normally has no minimum or maximum limit. This amount is determined by the annual charge that clients pay for the service. When the insured event occurs or when the customer wishes to cancel the policy and withdraw the accrued refund value in the insurance policy, the firm will reimburse the beneficiary with the guaranteed amount. 2.2. About the contract time. The term of a life insurance policy is the period from the date of policy signing until the insured's death, cause of death due to accident, illness or up to the age of 100. Whole life insurance is a sort of long-term insurance in which the insured is guaranteed to be paid. In the case of the insured's death, the sum insured will be paid to the beneficiary. If the insured is still alive, he or she can cancel the insurance at any time and get an empty cumulative return value for the policy that has been in effect for 2 years. As such, a whole life policy may be viewed as a sort of electricity savings, with the goal of generating a significant quantity of money for the future recipient or receiving the accumulation when the insured retires. 2.3. About the annual interest rate. Whole life insurance policies typically have very high interest rates. The bigger the refund amount, the longer the contract stays in existence. For instance, in Vietnam, on November 20, 2021, a 23-year-old purchases a life insurance policy. The contract calls for a $500 million insurance policy, a $6.7 million annual premium, and a 12-year premium payment period. If this individual dies during the contract period, the beneficiary will get 500 million Vietnamese dongs. 2.4. Benefits from critical illness insurance. If the insured individual is diagnosed with a terminal disease, life insurance can provide a 50% advance on the policy sum: cancer, stroke, polio. Unlike other types of life insurance, which only provide payments in the case of death or severe and permanent incapacity, additional insurance packages can also be purchased by insurers: prepaid critical illness insurance, hospital cost support insurance, terminal illness support insurance, etc. The annual fee is quite low. 2.5. Premium payments can be made in a variety of ways. Participants may pay a one-time charge or pay on a yearly, quarterly, or monthly basis. Fees paid during the contract's length are set. The total covered, the face value of the insurance, is decided by the annual premium. Normally, if the insurance period is 11 to 15 years, The policy can be kept in force until the insured reaches the age of 99. Unless finances are really tight, it is better to pay the amount in whole and on time as specified in the contract. You can pay those costs or merely the future installments of the contract after you've stabilized. 3. Compare whole life insurance and other insurance options. Whole life insurance provides several advantages over standard life insurance, including the following. Profitability is fairly high, far greater than for other products. And a minimum yearly interest rate is committed. The consumer is covered by a substantial quantity of insurance. The policy period begins at 1 month and can run up to 100 years, lifetime coverage. The customer has the opportunity to withdraw all or part of the contract at any time and get a refund of the contract's accumulated investment value. Premium.